The announcement from UOB followed similar price revisions by DBS and OCBC to their fixed-rate packages. For a fixed 2-year mortgage, the rate has increased from a median of 1.15% in December last year to 2.75% for DBS, 2.98% for OCBC, and 2.98% for UOB. Mortgages with floating interest rates will also cost more. The 3-month Singapore Interbank Offered Rate, or SIBOR, has risen from 0.43% to 1.9%, while the 3-month Singapore Overnight Rate Average, or SORA, has risen from 0.15% to 0.7% compared to the previous quarter.
I think what would happen is that buyers would be more price sensitive, right? Because it's going to impact your TDSR, at the same time it's going to impact your mortgage repayments and all that. So what will happen is that demand would be affected, especially those who are at the cusp of sitting on the fence, they're not sure and they are price sensitive and all that. But if you have buyers that have raked up enough capital upfront to do a good upfront payment, I think the mortgage repayments will be something that will sort of deter them. But at the end of the day, I think property as not as an investment, as buying property as for owner occupancy, for family formation, the demand would still be there. But I think the higher interest rates will basically push decision making to be a little bit more difficult.
With the US Fed indicating that more rate hikes are on the way to combat high inflation, it's likely that mortgage rates here will continue to rise.
We are still, not at the peak of interest rates yet, right? So I think, with the Fed rates, what we call revisions looming, there will be some people trying to lock in their home purchase. That's why that basically creates part of the demand. And if you look at interest rates and even Singapore home prices across the spectrum, across Asia, we are probably one of the 3 to 4 lowest interest rates across Asian cities.
While rising rates might potentially dent demand for residential property, analysts say there are other factors propping up those prices.
If you look at the land bids and the cost at which the developers are acquiring the land, it has been going up, it hasn't come down. You're seeing the construction cost is going up, manpower cost is going up, developer margins have been on the thinning trend for quite some time at this point of time. So there is very little room for developers to cut the prices at this point of time. And I would expect the cutting the prices to move the inventory would be a last measure for developers, only in the case if they are coming closer to their 5-year deadline of completing their ABSD measures and they might need to aggressively move the inventory. That would be the case. I would believe developers would blink and cut the property prices.
Experts say Singapore landlords who rely on rental income to pay for their mortgages may be pressured to raise rents if mortgage rates continue to rise. The local rental market has been resilient in the first half of the year as Singapore opened up and more foreign workers returned.
Rental prices has increased close to 50% in the past 12 months, and that is unprecedented level. And that is actually largely due to the drop in supply, significant drop in supply, mostly due to the hot resale market last year, plus the delay in a lot of constructions. And also at the same time, we are seeing a lot of inflow of talents post-COVID. So that's why we are seeing a lot of viewings and a lot of listings actually have a lot of viewings compared to when it was in the past. So that actually is what is driving up the rental market. And this is probably going to continue as well towards the end of the year unless there's more units that are released into the market by the landlords. So actually to a lot of landlords, this is a good time for them to consider leasing out if they have the extra capacity.
On top of the appeal of resilient prices and returns in the current volatile investment climate, there are long-term considerations beyond interest rates as well.
One is definitely capital appreciation. This depends a lot on the outlook of the country, and I would say in that point, I think Singapore is doing relatively quite well. When the interest rates go up, investors do search for hard assets, and hard assets are typically seen as an inflation hedge. Like precisely the reason is because asset classes like crypto, etc., don't have an inherent value associated to it, but properties are ones which you can see it, you can feel it, you can rent it, and you can generate income out of it.